By the end of this video, with these 5 powerful rules, you'll be able to get quality entries using your chart. With these 5 powerful rules, you will be able to get quality entries that you can use to trade any asset, right? So all you just need to do is focus on what I'll be saying and make sure you understand every bit of it. The first one we have on our chart is the check for the directional bias of price. The second one is look out for area of interest within the major swing time frame. The third one is scale down to what minor swing time frame for what point of interest. Then we now have the fourth one, which is look out for what break of structure or market structure shifts within that same point of that is minor swing time frame, right? So the fifth one is take your entry within the valid order block or breaker block. Remember, valid, responsible for the break of structure or the shift in market structure. Now, I'll be using gold for example. So this rule, I'll be using this rule to get entry from gold, right? So let's check gold, SAUSD, SAUSD. Oh, sorry, USD. So remember, the first rule says you should do what? Start from what? Your major, check for what directional bias of price. So if you want to check for your directional bias of price, you start from what? Your major swing time frame, which is your daily and your 4-hour time frame. That is the way you can get your what? Directional bias. So if you look closely, you can see that the directional bias of price is what? It's bullish. Price is buying. It's giving us what? Higher price, right? So for that reason, we already know that if we are to take any trade within this pair, which is SAUSD, we should be looking for a buy opportunity. Should be looking for a buy opportunity. So I do use this tool, trend line tool. I'll just extend it this way and just leave it that way, right? So the next thing I will do is go check for what rule 2, which says look out for area of interest within the major swing time frame. Now, if we are to look out for area of interest within this major swing time frame, is those areas that we likely believe that price will react on, maybe to continue buying or react on to reverse price, right? So I will zoom out. Let's look for area of interest where price will likely want to react on. Now, within the daily time frame, you notice that, let me take this out. Price already what break this resistance level. You see that this candlestick sold, right, forming what a resistance level. So price already break this resistance level, giving us what a clear direction that market still want to what give us higher price. So you use your tool, you mark your area of interest, which is, as I do tell you guys, if you watch my previous video, I said the basic market structure knowledge is whenever price takes out a resistance level, it tends to do what? Convert that resistance level to a support later in future. Just something like this before it continue the upward movement. That same scenario is what we use for this trade. Sorry, for this analysis. So price already break what? The resistance level, which we now identify as what? Our area of interest respecting the rule 2. Now, the rule 3 says scale down to minor swing time frame for point of interest. Now we have our minor swing time frame, which is 15 minutes, 5 minutes, and 1 minute. But sometimes you can also use your intermediate time frame, which is 30 minutes, 45 minutes, and 1 hour to do what? To reference to what the major time frame is saying, major swing time frame is saying, right? So for that reason, let's scale down to what our intermediate time frame first, which is 30 minutes. Now, scaling down to our intermediate time frame, let's know if price will actually respect what the major swing time frame is saying. Definitely it's supposed to, right? So looking at the intermediate time frame, we can see that price has not gotten to what our area of interest yet. But if we want to join this trade, we want to join this movement, because price is obviously moving to the upside. We don't know when it will start selling because it's bullish. So what we just need to do is what? Look out for what? The recent support level, or the recent violated resistance level. That is a resistance level that has been violated, right? So now let me zoom out. Then any place you see price sell from is what? A resistance. Then any place you see price start to buy from is a support. Now remember, price starts selling within this level. That is where you see the candlestick. But I don't like drawing my resistance level. I like drawing it within the body, right? So this is the resistance level of price, the recent resistance level of price, right? So now let me draw it properly. And we have this level, which is at the recent support level of price, sorry, the previous support level of price, and this area is the recent support level of price. But I will likely neglect this, right? I would likely neglect this. So now we have what? Recent resistance level that price already broke out from, creating a new high. Then we have what? A support level, a previous support level. So what I will now do now is to respect the rule 3, which says scale down to what? Minor swing time frame for point of interest. So I will now scale down to 15 minutes to get a clearer vision. Now, if you look at the 15 minutes candlestick formation, you notice that it's giving you what? A clearer vision. That is why we use this minor swing time frame for what? Entries. So now, within this 15 minutes time frame or minor swing time frame, we can see that we now have what? Clear break of structure to the upside. We have a clear break of structure to the upside, which is around this level. And after price broke structure to the upside, it haven't retraced back. And this is supposed to be what? This is supposed to be a very good resistance level. You notice that price rejects there many times before it started buying, before it broke the resistance level. So now that will now be what? Our point of interest. Let's look out for rule 4. Rule 4 says look out for a break of structure or market structure shift. Market structure shift is used for price when price likely want to reverse. But for this scenario, we are looking for what? Higher price. So we'll be using break of structure as our entry model. So break of structure, obviously you can see that price already what? Broke this resistance level to the upside. Price already broke this resistance level to the upside. This is it. It broke it clearly to the upside. So qualifying the rule 4. Now the last rule, which says take your entry within the valid order block or breaker block responsible for the break of structure or shift in market structure. As I said, for this entry model, we'll be looking out for what? Break of structure. Now the order block that we can find there is this order block. Now how can we know if this order block is a valid order block? As I said, we have what? Another rules that guide us on taking or picking a very valid order block. But the first one I will just let you guys know now is inducement, right? Inducement is what validates, is the number one thing that validates, that gives our order block more strength, because you know price will likely want to clear liquidity before coming to your point of it. If price did not clear liquidity before coming to your point of interest, it will definitely turn your point of interest to what? A liquidity. So you have to just be aware about that. So the inducement is after a break of structure, that first pullback that did not get to your point of interest. Now, you know, for this pattern, we have order block as our point of interest. That first pullback that did not get to your point of interest is your inducement. And it has to do what? Retrace back at least 50% of that movement, which is doing now. This is what gold is doing. It's giving us what? Inducement level. So now what I'll be expecting to do for this trade setup is waiting for price to do what? Come back to my order block. Even if it tap within this candle level, I will look for what? A buy, and I will target this recent high to be taken, since the market is still bullish. So this is how you keep on refining your entry using these rules. And we have other rules that guide us to pick our point of interest, right? But for this scenario, and this is what for this scenario, I'm only giving you guys this 5 powerful rule. Believe me, guys, this rule is so powerful that if you learn it and you backtest and you just get used to it, keep on refining it, you'll notice that you'll be making more wins than loss. So uh this is just a quick guidance, or this is just a quick education for you guys to learn, because I noticed you guys have been saying that I don't post YouTube video anymore. So from now henceforth, by the grace of God, I'll try our possible best to keep um posting educative videos so that you guys can learn. So the only thing you can do to encourage us to keep doing what we're doing, right, good, is to do what? Click the subscribe button below, turn on the notification bell so that you'll be the first to watch our video whenever we post or whenever we upload. Believe me, I'll be posting educative videos, premium educative videos that I know that, and it will be rule based. It will be rule based so that you can have your rule by your side, and your rule will do what? We guide you on how you should trade. Because if you have a rule, you have a proper risk management. Tell me why you shouldn't make profit, right? So if I'm to take this trade now, I will just look out for this other block, because obviously it already gave me what? A very clear inducement level. So I'll just look out for this other block, and when price comes back there, I will first confirm the entry by watching the candlestick formation. This is why I said in our next video, I'll be explaining what I mean by candlestick formation. We also use candlestick formation for what? A clear entry model. So for this being said, I believe you guys can also benefit from this trade if you just watch this video and you're opportunity to watch it now by this time of the day before price get to the point of interest. You can take this trade, but remember, risk what you can afford to lose, right? This is SBM, and I remain one of your best, yeah, I would say one of your best mentor right now on YouTube. Do your best to yourself by clicking the subscribe button and expect our upcoming videos, and also remember to what? Pray before trading. And for that being said, remain blessed. SBN Forex.